bulls, bears, and avoiding market whipsaws with stock market analyst Mike Turner on this episode of Unlock Your Wealth Today. Your life fully invested. Welcome to the show, Mike. I'm so excited to have you on Unlock Your Wealth Today.
Love to be here. Thank you for having me.
So it's so exciting. So first off, how did a math guy become so good at stocks? That's what I want to know.
Well, it was almost self-defense. I had hired a big asset management firm to take care of my money, and they ended up losing about a little over half of it in a very short period of time. It was awful. And so I decided I couldn't lose money any worse than they could. And I had these math skills. My background is engineering, computer science. I'd run a software company for nearly 2 decades. So I began looking at the market and saying, how could I apply those skills to the market to help me manage my own money? That actually spawned another company. I began building these tools. It is a series of tools that looks at each individual stock and the indexes, all the market, and it determines whether or not those indexes or stocks are moving up or down and whether or not you should be in or out of them. And the beauty of it is, it shows people how to get out. You know, Heather, most people don't know how to sell. They do know how to buy, but they don't know how to sell. They spend all this time doing research about, well, I want to buy this stock for whatever. Maybe they think it's a value stock. Maybe they think it's going to go to the moon, and they buy it, and it starts going up, and then it starts to go down. They think, what should I do? Should I buy more now that's going down? Should I sell it now and take profit? I don't know what to do.
Yeah, I mean, dollar cost averaging has always been the mantra.
I've solved all that. And the way that I solve that is that I want to know how much a stock can move against me, and this is the key element, and still be in an uptrend. If it moves against me by more than that amount, and I calculate that, then I want to sell it because the trend has changed. You want to give stocks and ETFs the ability, the indexes, to have volatility, but at the same time, we're eventually going to hit a bear market. When that bear market occurs, you don't want to say, oh, well, I'm just going to keep holding on. You could hold on and lose 30, 40, 50, 60%. So I show people how to get out. As well as get in. I mean, it's all a part of the math that's involved. I'm a trend-based investor.
So this isn't a crystal ball prediction.
No, it isn't at all. And a lot of people think you have to do that. You have to say, well, here's what's going to happen, and that's why you want to buy this or sell that. I don't do that. I have determined that the true reality of being in the stock market is the stock market. If the stock market is indeed bullish, I want to be bullish. If the stock market is flat, I go to cash. If the stock market is going down, I want to be bearish. I make money going down in the market, and I make money when the market's going up, and so do my clients. My clients are looking forward to the next bear market. And a lot of people
have a strategy in place?
They have a strategy. They know what's going to happen. They don't know when that's going to occur. I measure when it has started, and this is the key element. The market will tell you when it has topped and begins to go down. And then again, it's looking at how much it goes down. You don't have to wait till the bottom to say, oh, that was a bear market. You can get out very close to the top. Not at the top. I don't try to get out at the top, don't know when that is. But I'll know when the top has gone by. So when the top has gone by, I switch horses. I go from bullish to bearish.
Okay, I like that.
So in fact, the way I look at the market is this. I look at the market as being either in one of 3 conditions. It's either going to be bullish, bearish, or neutral. So if it's above what I call a transition zone, and what that is, Heather, it's where I look at a 200-day moving average of the market, and I've calculated what one standard deviation of normal volatility is. And when the market is above that, I want to be bullish. When it's inside that, I want to be in cash. And when it's below that, I want to be bearish. I use inverse ETFs to be in the market when it's bearish. In fact, I've got one model that's a 2X. And that one model does this. In a bull market, I'm in a 2X ETF. That means it moves up twice as much as the market moves up. But in a bear market, what's beautiful about it is that it moves up 2 times to what the market goes down. It's an inverse 2X.
Wow.
And so if the market were to go down, think about it. If the market were to go down, say 40% in the next bear market, and you were in an ETF that would go up twice what it goes down, you're up 80. And the market's down 40. That's what can happen. Now, I'm a fiduciary, okay? I can't promise any particular performance is going to occur, but I can tell you that all of my clients are set up in these models so that they can take advantage of those moves in the market, bullish or bearish. And it has to do with the math. Again, it's a 200-day moving average. There's a band around that that's one standard deviation of normal volatility. And what is that? It means that one standard deviation of normal volatility basically means that the market, or whatever you're measuring, 67% of the time it's going to trade within that range. Okay, so maybe for an ETF it might be 4% or 8% or whatever it is. That means that 67% of the time that's the volatility range it's going to have. So what happens is that if it moves against me by more than that, I have to assume it's gone from normal volatility to a change in trend, and I want to get out.
Okay.
So the whole key is about timing when to get out, not knowing what's going to happen in the future. I'm always looking in the rearview mirror.
Well, it sounds like with what you do, you don't need to know what's going on in the future.
You don't. And here's the key to that, Heather. A lot of people know this statement I'm going to tell you, and they're going to almost laugh at what I'm getting ready to tell you. But the current trend in the market, everybody wants to know, how long is this going to last?
Right.
How long is this current bull market going to last? And I know exactly how long it's going to last. I know exactly to the day how long it's going to last. I do.
Okay.
And what's really fascinating, everybody watching this knows it as well. They just don't know that.
Really?
That's right. And here's how they know that. The current trend in the market will last exactly until it doesn't. Yes, that's hilarious. That's funny.
But it makes sense.
Yeah, it makes sense.
I was like, don't, Captain Obvious.
So if that's true, what do you think your job ought to be? What should be the most important thing you're doing? Is measuring when that doesn't has occurred.
Okay.
Not when it will occur.
So we're looking for the doesn't.
We're looking for the doesn't. So if the market's moving along and it drops down like it did on Friday, just this past Friday, it dropped down a little bit. Now, it didn't get to the doesn't point yet.
Okay.
It dropped down a little bit, but not near enough. And I know what that doesn't point is. It's one standard deviation of normal volatility, and the market did not move down that much, not even near that much. It was like 1/10 of that.
Okay.
So you can measure that with math. You can know when it has occurred.
But some people might have freaked out.
Oh, I'm sure there's people that did freak out. They're saying things like, "Oh my gosh, the Fed's not going to drop rates now, and the market's going to get tanked," and all this kind of stuff. They got all these things that they worry about, and I don't worry about any of them. I don't worry about any of that. It might happen, but the market will tell me when it has started. And when the market has started into the next bear market, I'm ready for it. I can measure that. I don't have to wait till they get to the bottom. I get out not at the top, just after the top. I get back in just after the bottom. And I can make money in between, either up or down.
Well, that's pretty exciting, and I have to tell you, I'm not as computer nerdy as I was in the 80s when I was in high school and I was coding, but I love math, because for me, math is the only absolute. It never lies.
It doesn't lie.
It never lies. It's not subjective like literature.
It's not emotional.
Right. It's not subject to interpretation.
Right.
And it works. And that was the one thing that I loved about math. And when I got into programming computers, I was super excited because math set you free. I mean,
it does set you free. And one of the things that people that are listening right now and watching are thinking, yeah, this trend-based stuff, we've read books like Jeremy Siegel's written some books about it. It's if you use a trend, you get whipsawed around the trend. There's a way to solve that. And I have solved that mathematically, okay? Is that we'll have a trend, and we need to have a band around that trend that tells you when the market has really established a firm trend. It can have a little trend moving above or below that 200-day moving average. But once it gets outside that band, it has established a well-defined trend. Now you can rely on it more. And so what is that band? It's what I've been saying through the whole program. It's one standard deviation of normal volatility above and below that 200-day. And people that are watching right now, if they want to actually find out and see how that's done, not to promote my book, but I've got a book where I go through and explain in detail how this is done. It's called Rule 1 of Investing. Then go to Amazon and pick it up. Just look for Mike Turner on Amazon. Okay. But it will tell people exactly how to do this. The thing that's important for me, Heather, is this. I want people to understand that they don't have to get trapped in the next bear market. You don't have to get there. You don't have to buy and hold and lose half of your life savings in the next bear market. That doesn't have to occur. You can actually make money in the next bear market, a lot of money.
Well, and I think about some people, some of the boomers that have those 35-year-olds still in their basements, that and they've given up a significant portion of their earnings to support their adult children, and now they're scrambling. They can't afford.
No, they can't afford. And here's the thing. It's like in 2007, 2008. It took 13 years to get back to even. And in that 13 years, we hit another bear market correction, okay? And so you've got to be, the thing that you've got to be careful about is not just assuming that the market's always going to come back, because it will. The market always has come back, but you don't have enough time for it to come back to even. And what happens if you need that money in the meantime?
Right.
Okay. So buy and hold only works under these conditions. Number one, you never need the money. Number two, you don't mind losing 50% from time to time. And number three, you're actually going to leave it to your kids because you're never going to get to use it, okay? So you really...
What's the point there?
What's the point? So I'm all about make money when the market's bullish, make money when the market's bearish, and when it's in between, go to cash.
I love that. If folks want to find out more information about what you do and to get involved with all of the different things, where can they go?
Go to turnercapital.com, www.turnercapital.com. Click on the presentations tab and see a lot of videos that I have done about this concept. There's also a tab there that says for more information, to open a dialogue. And if they'll click on that, fill that out, and I'll call them. We'll talk about it.
Outstanding. Well, thank you so much for being
Heather,
a part of today's show.
Thank you.
And for those of you without a pencil, never fear. UnlockYourWealthToday.com is here, where you can visit Mike's show page, get the links to all of his resources, and so much more. For the maestro of Moolah, Michael Terry, I'm Heather Wagenhals. Now go out and unlock your wealth today.
UnlockYourWealthToday.com is produced by Heather Wagenhals and the Unlock Your Wealth Foundation. UnlockYourWealthToday.com and its affiliates are copyrighted 2018 with all rights reserved. For more information on the Keys to Riches Financial Wellness Series, please visit our website at www.unlockyourwealthtoday.com.